Hi, my name is Jane Wojtaszynski, and I'm a mortgage agent with DLC YBM Group. Our office is located in Barrie, Ontario. Our brokerage has partnered with a company offering a unique service that could potentially save you thousands, if not tens of thousands of dollars. The average person has limited knowledge of how credit works, and in order to survive a volatile economy or a personal economic crisis, one must know the rules of engagement. My guest today, Corey Klein of Strategic Credit Solutions, is here to tell us how SCS can potentially save you that kind of money. This option is only available through a licensed mortgage broker or agent, such as myself. Your bank will never, ever discuss anything like this with you. I encourage you to listen to the end. Your financial health may very well depend on it. And now, I am delighted to welcome Corey Klein from Strategic Credit Solutions. Hi, Corey, how are you today?
I'm doing great, Jane. How are you doing?
I'm doing well. Would like you to give us a little synopsis of where you come from, what's your background, and
Yeah, absolutely. Thanks, Jane. So I work for SCS, which is Strategic Credit Solutions, and what we do is we try to put together solutions for when people are struggling with their credit and they've got debt problems, and we work hand in hand with mortgage brokers. So we Jane and I might find clients together that we could help that individually we might not be able to. So this company's been here since 2011. Our primary focus is finding homeowners that are struggling and seeing if we can come up with a debt solution for them, which requires us to reduce the amount of debt they owe, so hopefully by a considerable amount, and then make it easier for Jane to be able to come in and do a refinance and take care of the rest for you.
Well, that sounds great. Do you have a bunch of questions to ask you, if that's okay? These questions would be from the perspective of somebody who's kind of looking into this and seeing if this might be a solution for them. Given the job requires credit checks, how would we work on improving my score while ensuring that I maintain my employment? How about that question?
Whenever you're going through something, it's never a good time to be going through it, right? Like it's always seems to be at the most inopportune moment. We understand that taking that pause and looking at things and saying, okay, things are going in the wrong trajectory. So how do we pause this and start moving in the right trajectory? Talk to a professional that can take a look at the credit bureau with you. Tell you a lot of times people think things are worse than it is. That's something that we can fix this way, but then we might take a look at other situations and say, no, that is something that you need to address right away, so that it doesn't become worse.
Timing is key. This other question is in regards to prioritizing debts. So which of my current debts should be prioritized to have the most immediate positive impact?
When we take a look at trying to fix a credit score and perhaps picking and choosing what to do first, definitely it's going to be the accounts that are a little bit late or a few months late. Those ones we can correct relatively easily, and you might even get them back into what we call an R1 or an I1 status, where it's right up to date and everybody's happy again, and then that really reflects well on your credit score. The other thing that you can do, which is almost as impactful, if your credit balance is over your credit limit, that really affects your credit score greatly, because the credit score really is only an indication that you're going to miss a payment in the next 90 days. And you imagine if you're over limit on something, then you're probably in the position where that might happen, so your score goes down. But if you're even $2 over, it's like the same as being $500 over. Same thing when you're approaching your maximum limit. So if you have a $1,000 limit and you've got a $998 balance, it's going to be working against your credit. You want to get it. I mean, I hear a lot of people say under half. What I'm seeing is under 70%. If you had a $1,000 limit, you'd want to be under $700. I mean, the lower the better, and the lower you get it will definitely help. Collections and stuff can be reported on the credit bureau, and again, that's where we can help. Take a look at it and let you know how far something's actually gone, which ones to address first. So now, at the same time, we're going to take a look at the entire situation and make a plan for everything. We can customize it and say, okay, well, we're going to take a look at the whole picture and say, okay, how do we change this so that 30 days from now, everything feels better? That's the plan. A lot of things in credit are backwards. And although common sense in a household, that's going to make sense for maybe limiting how much you spend on credit. And I can
Right.
appreciate that move. But as far as the credit score goes, if, let's say your limit was $5,000 and then you dropped it to $1,000, now you're going to be sitting there with $1,000 limit. And it's going to show this record from like 3 months ago that you owed $5,000, and the credit bureau doesn't really differentiate that. They just say, well, your limit's $1,000, and a few months ago you owed $5,000. They didn't take into account that your limit was $5,000 a few months
Right.
ago. So it's often good if you just take your credit, the ones that are particularly been challenged, and just evaporate them, settle them, or pay them off in full. If you can leave them open, not use it, make sure nothing gets used on it, open the statement every month to make sure that an annual fee or
Right.
something wasn't charged, and because you don't want to miss a payment on it. These things are actually better for your credit score than closing them. However, if temptation is going to get you back into the same problem, then that's where the conversation, you say, well, what's right for me? It's different for everybody, but and we do customize it, but the ones that were an issue, if they're done and gone, and we get you brand new cards that you can start to show that, look, I had a problem in the past, I fixed it, and now with my brand new cards, I pay it off in full every month, or at least I've made my minimum payment and I'm not over limit. That's often the way for a lot of people to go. But like I say, that is very customized to each person's credit score.
That time frame for establishing new credit is usually,
like, we can see people's credit scores go through the roof over a matter of weeks. Like, but if you take the right actions, you can see people that go from scores under 600, where they're not being able to qualify for just about anything, to well over 700, where the banks are so happy to lend money. Like I say, it's not always common sense. So it's working with somebody that knows and understands like how this credit bureau really comes up with a number. But as far as rebuilding, it's like your insurance. If you were in a car accident recently, then your
Right.
insurance is going to spike, just like your credit score is going to go down. But as you get further away from that accident, every year your credit score gets better. Now, there's this immediate adjustment that comes in when you do something to fix your credit. And then it does take time to do the rebuilding. Generally, when you're talking to the banks, they really look at what's happened in the last year and what's happened in the last 2 years. And if you
what
can
the
build
story is? Do
What's
they
the
care
story?
about the story?
they you know what? Bankers used to. I don't know how much control they have anymore.
It depends if you know them.
Well, and that's the case. That conversation happens better through a broker to the bank than a client going in, because when the client goes into
Yeah.
a branch, honestly, what I'm seeing is the computer's making almost 100% of that decision. When
Yeah.
you're dealing with a broker, the broker's dealing with another person at the bank, and they're having those conversations. But the key thing is, if you have credit issues, that you're putting a line in the sand and saying it's fixed, it's over, and then you have a set period of time, 1 to 2 years generally, where you're going to say that was in the past, and the new me doesn't miss payments, the new me isn't over limit.
Question: are there any debt consolidation options that won't initially lower my credit score further?
And it's very dependent on your situation. Sometimes it's not at all that things go down. Usually, by plenty of times, I should say, we've seen people that they've taken action and immediately their credit score has gone up. They've made the corrections, the next statements are made, usually within 30 days, it's reported to the credit bureau, and all of a sudden, Equifax is taking a look at that client's situation, saying, okay, well, wait a second, they just paid off their credit cards, and all this change just happened, and they're in much less of a risk of missing a payment in the next 90 days. So the credit score is shooting up through the roof. So yeah, there's lots of options to take that are going to improve your credit score. Sometimes it does get worse before it gets better. But if that is a means to an end, then you need to be walked through it. Because the way I see it is, okay, if you don't do anything, it's probably going to continue to get worse anyhow. Your credit score is maybe going to go from 600 or 650 to 600, but you know that the new position you're going to be in is going to be a better financial position, then quickly the credit score should rebound and start growing again. So it's usually not the best thing to do nothing.
Well, in working with a mortgage agent, you're going to be representing the people who approaches the lender for the deal.
The deal, yeah. Most importantly, definitely not the client. At the initial stages, when you're just becoming late, like things are just starting to fall apart. Yes, when the bank calls you, answer the phone, talk to them. They might have a great solution for you. So do talk to them at that beginning stage. But when they start to get angry because a few months have gone by and you can tell that the tone changes, you've gone to a different department and it's a little bit more threatening, and they're not mean people, but they are telling you how it is. After them, it's going to a legal department or to lawyers.
Right.
And that's the part where you're out of your league. They mean business. So at that point is when you want to bring on a professional. So with our company, we have a network of lawyers that only do debt settlement. I mean, the bank might hire a lawyer to say, okay, well, go get that money back from the client. Okay, well, that's great. The client can have a lawyer as well that speaks that language and can say, well, wait a second, they owe $60,000. They don't really have $60,000 to pay it back. You probably shouldn't have lent them $60,000 in the first place because you knew they
Right.
could pay it back. Tell you what, maybe 30,000, 40,000, maybe a conversation like that. And part of the agreement is that it's going to now show up on the credit bureau that it was paid in full. So the sooner that happens, the better chance of getting the credit fixed sooner. But on the other hand, if something's gotten all the way to the end of the line and the client has gotten a letter from a law firm on behalf of the bank saying it's time to talk, that is also when you can have the best negotiation. They're feeling like they're out the money. And so you have a chance to go to them and say, look, we would like to come good with you. We've struggled and this is our story, but you don't want to tell it. You want the lawyer to tell it for you. I had a situation recently where this woman, unfortunately, she was very nervous. Although we were just starting to take over everything for her, she called a few of the lenders to say, look, I'm going to come, I pay you every dollar. This is what I'm doing. And we could have negotiated it. And it was tens of thousands of dollars that she missed out on saving because she just kind of reacted too quickly. With us, it takes all the emotion out. Once we're involved, the lawyers, the banks, they don't call the client anymore. They're calling us. And so the stress can be relieved on your side, knowing someone else is taking care of it. And then it's settled and you're getting the best savings. I laugh because they'll offer a client, they owe 50,000 and the client will call and say, oh, what do we do? Or can you shave a little off? And they're like, okay, how about 49,000? The client's thinking, oh, great, I just saved $1,000. Perhaps we could have saved $25,000. So it's, and every lender is different. That's the thing. We know what buttons to push. What lenders are just looking to make a settlement and be done. There's other ones that they don't want to settle. That's just the way they do their business. And we'll tell you that. We'll when we get it, we'll take a look and we'll say, okay, we can settle all this, or maybe you only want to consider settling these ones and, pay those ones in full, or don't pay those ones right now, or, it can be customized, but, we've been doing this for quite a while. We know how the game works.
So is that really the difference between a proposal and the settlement option that we're talking about here, is that we can customize it?
That's probably one of the biggest differences. Now, a proposal, also, you're paying it generally over 5 years. So usually, if you owe $100,000 and you do a proposal. Now, if you're a renter, you might get a big chunk off. You might go in with 100,000 and they can make an agreement and make it possible to do it over 5 years. So and I think that is a wonderful plan for if somebody's renting and is kind of stuck financially and it's because of debt and they need a solution. I think it's a really great option. Talking to a trustee about that's great. But if you own a home, and particularly in today's environment where a lot of people have a lot of equity in their home, trustees and bankruptcies don't always work out the way that they used to, because the banks look at it and they say, well, you know what, you could sell your house and pay us back. We don't really want to entertain this. But yet with the debt settlement, we go to them and we say, look, the clients, Jane's helped them come up with this much money. This is what we can offer you.
Yeah.
And again, we pick and choose and customize it so it's going to work out. But then we say, maybe, for example, it's bank X, Y, and Z. Those ones are going to do settlement with. But maybe this other lender over here that you've had a good relationship, maybe we pay them in full, or you just keep going with that lender because things have been going well.
Well, and I think a lot of people don't really have any clue that this is an option, and their first inclination would be, yes, I have to sell.
Sometimes it's the right move. Sometimes the bank has approved you for something that maybe they really shouldn't have. And it is time to move. But if there is a way to be able to keep your family in the house that they're in and yet alleviate the financial stress and make a plan that's going to work for everybody, then, I think it's definitely worth comparing, taking a look,
For sure.
Say, well, hey, Jane, if I refinanced, what would that look like? And a lot of times, I know it's challenging with mortgage rules and everything to be able to come up with a complete solution sometimes. And that's when that partnership with the debt settlement company can come into play, because we say, okay, well, Jane get you this much money, but if it's not enough to solve the problem, then maybe we take it an extra step. Say, you keep that house, we'll do this mortgage plan, and we'll make the debt fit inside that plan that Jane can come up with.
And that can look any number of ways depending on the situation and what kind of debt it is, who it's to, and so it's really a case-by-case situation, right?
Absolutely, yeah. Every single client that you see, as well as what we get referred to us, is a brand new slate. It's exciting that way, because we just get to take all the information that we know from all of our previous clients and say, okay, now in this situation, which is everybody's debt situation is completely different. This is what we should do with this client. And it can be fun to do. I don't know if fun's the right word, but it can be exciting.
It's like a puzzle, I guess.
It's like a puzzle, yeah. And how are you going to get from here to here,
Right.
and mapping that out. So it's
an escape room.
Yeah. Yeah. Get me out of this debt.
If you escape this, you can get out of your debt. I think we touched on this a little bit, but what's your approach to handling debt collectors who are already contacting me? I think you mentioned something about that.
It all depends on how far in you are. If they're
the level?
calling you because you're a week or two late, the bank is generally interested in helping you. They are looking to see what's happening. Is this a one-time thing? Can we help? They've got tools in their arsenal to be able to say, okay, maybe we can do something to get you through the next month, and then everything's going to be fine. But when it's all your cards, you're there, or
you're playing credit card arbitrage.
Yeah. Yes. Exactly.
Stealing from Peter to pay Paul.
And the other one, and I've seen this, and it's happening a lot. It's particularly to seniors, unfortunately, are these door-to-door salespeople. I think it's going to slow down because the government's cracking down on some different protections that they had. But they were going and they were selling to these seniors particularly. Hey, look, you put in a brand new high-efficiency furnace, and you signed for this loan, and the government will send you the money to pay the loan off. But the money was never coming from the government. And what I was finding is once one person did it, once the person agreed, well, I think that salesperson went and told the friend, and the friend came and said, oh, we can do that for your air conditioner too. Well, we can do this for your water heater as well.
Oh, it's so sad.
It's so sad. And the poor homeowner is thinking this is a government thing. And the government's going to give me checks because they want to make everybody more efficient. And I mean, there are government rebates, but they're not to the point where they're paying off the entire loan. So people can get themselves in quite a legal situation because now they have all these loans they can't pay, and lawyers are being hired by the lenders that provided these loans to start collecting the money. So when you get a call from a collection agency, or the bank is being threatening, or they're like, it's not just uncomfortable, it feels scary. That's when you reach out to somebody and say, what do I do? And Jane's got options, we've got options. It could be a trustee. There's so many different options, but like I said before, doing nothing is probably not going to make anything better. Putting your head in the sand is probably just going to make it worse.
What are my options if I need to maintain credit cards for work-related expenses?
Yeah,
I think you may have touched on this too.
Well, yeah, because through our program, we can pick and choose. I mean, this is the one thing with a proposal. When you do a proposal or a bankruptcy, Everything needs to be included that's not
Right.
secured. Now, things that
Yeah.
are secured, like you may have an option to keep your car, you may have an option to keep the house, but the equity in them, you still need to pay back through either the proposal or through the bankruptcy. But further than that, with what we do, if there are accounts that you do not want to settle, then they just stay out of the plan from day one. Even if we are in the realm of collections and you get to call the shot. Let's say somebody owes 50 grand and they come back at 10, or sorry, 40 grand, so $10,000 less. We think you could save more, but you say, I'm out, 10 grand's fine. Thank you. That's your call. What debts you choose and how far we push them, this is all in your control. Leave it to the professional as best as you can, but it's not like you're out of control once you start. It's a partnership. We're just trying to act on your best behalf as the client.
People who are facing proposals or bankruptcies, you have no control. There's that feeling of helplessness, but this is some sense of ownership to it and control and empowerment in a way.
Some of what we do will mimic a consumer proposal, and some of what we do just mimics you doing a refinance. And it is unique because every client's different. Every time we get an application, the plan can be different, and it also depends on what the client's goals are. Like there's so much more that can go into the plan, as opposed to it just kind of needing to fit in the box and off I go. Particularly if you've had a bad experience with one bank and another bank good. And I've had that situation with many clients where they've said, I really would like to keep going with, this bank. I keep trying to hold back and saying what bank, because I don't want to show any preference from one to the other.
Right.
It definitely depends on the relationship and the experience that the client had with that bank more than bank with the experience that we have with the bank. But what we do know is if you're in trouble with that bank, how to deal with that bank. That's the difference, which might be different than the other bank down the street.
What's your success rate for negotiating with credit card companies?
What we're doing is a one and done settlement. We're saying, okay, the client doesn't want this card anymore, and or it's already closed, and this much is owing, but he or she can't come up with that kind of money. It's just not possible. So here's what we can do. We've been working with a mortgage broker. We've been able to raise this much capital. How about, and we also, the client also owes other people money too. So
for sure, yeah.
Here's what we can do for you. And it's kind of a take it or leave it position. And I mean, there is negotiation, but it is one time that card's done, it's behind you, shows up on the credit bureau that it's closed, zero balance. That's what we're after, is just to say that line in the sand so that you can start doing your credit rebuilding. That was your old life. Welcome to your new life.
On your credit rating, when there's a proposal as opposed to the settlement kind of situation, how does that reflect on your credit?
You do a consumer proposal. Generally, you're in it for 5 years. That's generally how it works. And then you get discharged after you've paid back what you agreed to pay back in the proposal. Proposals are open, so you can pay them off earlier, but sometimes that's a struggle. And so you've gone through your 5 years, and then you're officially discharged. And then you have 3 years after that it remains on the credit bureau. So it could be a total of 8 years that it's a negative commentation on your credit score and credit bureau. With us, it's generally, a lot of times people's accounts are written off, or it's collections, or it's bad stuff we're dealing with. And immediately, if we take one of these and we bring them up to being paid or settled, it's showing on the credit bureau that nothing's owing on this anymore. It does show, it's going to continue for a time frame to show that you had a problem there, just like it would with a proposal.
Right.
But it's showing that you took action, and it also rather says paid in full or settlement made. And so that other creditors in the future take a look at this and say, okay, you didn't walk away from it. You worked with the bank, maybe through a legal team, but you worked through the bank, you came up with something that worked for everybody, and you made a settlement.
Right.
But what you do need to do is explore your options.
Yes.
And just don't, just like there's all types of different mortgage brokers, there's all types of different trustees. So although there shouldn't be, the reality is we're all human and we do things differently. If you talk to a trustee and they were to say, yeah, oh, absolutely, you have to do a proposal, get a second opinion. Talk to a mortgage broker and say, okay, they said I should do it. What do you think? There's some fabulous trustees that care about your well-being. And those ones, if they think a proposal is good, they'll show it to you. A good one, if they think a proposal isn't the option, they're going to send you to Jane. Maybe this client is better suited with you. Not every trustee is like that. Getting lots of opinions when you're faced with something big until you feel comfortable that, yes, this makes sense. That I've heard this, I've heard something else as well, but this is the way that I want to do it. I love our name. And the strategic part is, that planning, but it's also solutions. And that's not just for the client, it's also for the bank, because the bank doesn't want to be in the position of collecting. They don't want to wonder if they're getting their money back. The way that we pitch it with even your bank is that this is good for them. This is good for the client. Let's just be the middleman that finds out, what can be done. Because until you prove otherwise, the bank just assumes you can pay back every penny that they lent you. Sometimes you need an advocate to come in and say, well, you know what, they lost their job, or this happened, or that happened, somebody was ill. Believe it or not, banks have a heart. They do, just like anybody else. You might find somebody seems to have a real rough exterior, but the right person can get to them. And we're looking to be that person for you to say, like, we understand what you need, we understand what the bank needs, and let's find something that it might not be what either of you intended when you originally took out the credit card, but it's a happy medium for what we have to work with today.
For somebody who's under stress, it's hard to kind of respond. I know for women, it's harder to respond without getting emotional.
And if you're going to call a collection company or even the collection, division of the bank, that's not your normal world. That's not a conversation. There's no way that there's not going to be any emotion in that. Something is going to trigger in your mind that's going to override your ability to use your best logic. And we have none of that emotion when we're negotiating, because you're hiring us to do that job for you. You don't have to think about it anymore. We're simply hired to get you the lowest price to get that debt paid out.
Huge stress reliever for people. It's going to be.
There's no benefit of us calling the bank and you calling the bank. That's not going to end well for you at all. And the other part of it is you can, if they call you, you just say, you know what, I've called somebody to deal with this. You're going to have to talk to them. They really shouldn't be calling, especially once we're involved. The calls should stop. And perhaps you've forgotten to tell us about Rogers is also calling me, and you just got so wound up that the banks were after you that you forgot to tell us about Rogers. Well, that's fine. We'll just add Rogers to the list. We'll take that over for you too and keep going. I
just love dealing with Rogers.
Yeah. Oh, geez, I didn't mean to drop any. I had a client that in my mind when I said that, yes, but yeah, I suppose I shouldn't be.
They often make mistakes, big ones.
You know what? I see every company, particularly in the telecommunications, you need to use extra diligence. If especially the biggest one I see is if you're returning hardware, you need a receipt. You need and you need to hold on to that receipt, because these boxes, I'm sure thousands of them moving around every day. You need to keep your documentation for those.
Well, and that goes on your credit bureau, right? Any kind of stupid little things you think isn't a big deal, it's going on there and it's going to affect your credit.
Let's say you don't return your television box, or well, you have returned it, but they don't have it recorded that way. It shows up as a collection, no different than like $100,000 line of credit that they say you're not paying back. It ends up at the same spot on the credit bureau, and it's really affecting the credit score the same way.
Which is interesting, because it's not relative to the amount owing. So
It,
It doesn't make any sense, really. Like
yeah.
people, the average Joe thinks, well, it doesn't make any difference. It's just a piece of equipment.
Yeah.
It's not my house. Why is this
There's
happening?
and it's because there's a whole category in that credit bureau that's all about collections and everything. If there's a collection, it ends up there, but it doesn't tell the story. It doesn't.
No.
It doesn't say, well, this was a television box, or it does have an amount on it, but it's when you get into that category, it's until it's settled, until it's paid, it is really affecting your credit score. Once it's paid,
Okay, so
better.
once it's paid, it's good. Good to go. We can just move right into the next thing, which would be how to repair credit discrepancies or things that sometimes there's things on bureaus that shouldn't be there and they've been long gone, been long paid off, and they're still hanging around.
Yep.
How do we fix those?
Now, first, there's a process that anybody can do themselves. You can go onto Equifax or TransUnion and get a form to fill out and get all the documentation and send it in. It takes about 6 months. From my experience, that you're not a priority when you do it yourself.
No.
If you work through an Equifax member, like a mortgage agent, and the agent said, look, we really want to create this mortgage solution for you, but these things that are on the credit bureau that are wrong are holding us back from getting you the best offer. Well, the mortgage agent has a direct link to Equifax. And usually what I see is within a few days or a few weeks, not 6 months, the problem's solved because Equifax understands. And like I say, the Equifax, just like the banks have a heart, Equifax has a heart. And so they're saying, okay, well, if this person is really trying to buy a house or really needs to refinance, and the mortgage broker is requesting us look at this so that the client can get on with their life, they prioritize that. And so it's the best way to address something that is incorrect. Now, there's all kinds of purge rules on Equifax that things are going to fall off over a certain time frame. Sometimes it works perfectly, sometimes it doesn't. Again, the mortgage broker can or mortgage agent can work through that with Equifax. But then sometimes I've also seen the mortgage agent say, you know what, this should fall off on the first of next month. So let's just wait a couple weeks, but that's where, like, again, it's you need a professional working with you that's familiar with this stuff.
What's the difference between, okay, there's every bank now has their little look up your credit score.
Yes, I love those.
Versus your actual bureau from Equifax. What's the difference between those two?
Almost all the ones that you see, particularly if you can do it for free, they're all done through TransUnion. And there's nothing wrong with that, except for almost every bank and lender relies way more heavily on Equifax than on TransUnion. So,
isn't that interesting?
Yeah, and not every creditor is a member of both. So sometimes things will be reported on TransUnion and not Equifax, or on Equifax and not TransUnion. I get it all the time. The clients will say to me, oh yeah, my credit score is 800 and I just checked it 5 minutes before I walked in here. And okay, that's great. When we, by the time we see the credit bureau, then it's, 620. And they're thinking, well, how could that be? But it's two different companies. Now, on top of that, you go to Equifax, and I don't know how many scores they have, but I know there's at least 5. Like there's a CRP3 score, there's a FICO score, there used to be Beacon, bank narrative scores. So you might hear or find out you have such and such an Equifax score, but that's your CRP score, let's say. And just about all the institutions, when it comes to mortgages, are going to be dealing with your FICO score. And so there's, so it's not that it's incorrect, it's just knowing what score to look at. So
it's a little misleading, don't you think?
I think it's hard because before, all that information was like completely hidden. Customers really had a hard time getting any of that. What I think is the best thing to do as a customer, if you really want to dive into your credit score, is you can go into Equifax and you can sign up for their monthly program, and the first month's free. and you can see what you've got there, and you can cancel it, or it's actually a great service. And I think it's about $20 a month. And so if you're paying that every month, you've access to your credit score all the time. You can see what's going on with if there's any late payments or if anyone's checked your credit. Like it is actually, but if you want to spend the money, you just want to know once, you can go on, check that. And that is pretty reflective as to what the banks and such are going to be looking at if they look at your credit bureau. So TransUnion, now, for the most part, they're similar. For the like there are discrepancies. So if you see your credit score going up at TransUnion, I'm hopeful that your credit score is also going up at Equifax. But they are two totally different animals, the two companies.
Interesting. Comes to the end of the road for questions. I just had the one question about credit repair and the after the initial process, and that would be something the mortgage person would be dealing with. With someone.
Definitely. Like on our side, we're fixing the problems that you have and making it just giving your mortgage agent more options with regards to your refinance, and then they really help you through improving your credit and maybe even graduating you to better mortgages as your credit gets better.
And so really, you're not going to get this kind of an option at the bank.
No, the banks are never going to suggest that you go settle your debt. And as important as bankruptcies and consumer proposals are to Canada in general, the bank, I don't think, is ever going to suggest that you go file one. So there's a level of onus that I suppose is put onto a family. Unfortunately, family's not versed in it at all. So that's where they need to reach out. And I think a mortgage agent is the right place to start, and just have that conversation. And then also, if somebody's gone to a trustee first, get a second opinion as well. See if there's a different option, and then you, the homeowner, makes your own decision, like what's right for me, because it's not cookie cutter. It's very customized to each person.
You mentioned to me yesterday about this option was available to you and your clients when you're brokering mortgages at one point, and you didn't want to do it. You were not looking into it because you just didn't trust it, or something like that, right?
I thought it was too good to be true.
Too good to be true. That's
too good
to
be true. I kept telling them that. They kept calling me, and I kept saying, yeah, it's just, something's got to give. I had a client, and she was really getting a lot of collection calls, and I thought, you know what? I think this company could help her. Let's try it. And it was remarkable. Client's phone stopped ringing, and she was able to put together a mortgage, and we were able to settle her debt. And so that we got everything cleaned up, but we didn't have to pay everything in full. And so we were able to make a customized solution for her. Now she's in that credit rebuilding phase. And had she not reached out for that, I think they might have just kind of defaulted to selling their house. They were that stressed about all the calls that were coming in.
Well, that's really unfortunate.
Yeah. And step one was just making the call stop so that they could think straight and have conversations and take a look at different options.
So was it at that point that you thought, okay, here's a viable option, or did you want to test it a little more?
Yeah, well, it was actually 2 weeks later. I had another call from somebody else, and their bank had financially sunk them. The bank really should have never lent them the type of money that they owed. It was ridiculous.
That's a seniors thing too. Like, I don't know why banks are lending money to seniors on a fixed income.
In the mortgage world, there's a lot of controls. In the credit card and car loan world, the controls are more lackadaisy. Unfortunately, it doesn't always work out well for the borrower that way.
No.
And so this family was in that category. I mean, they were younger, maybe in their 40s, young kids and all that. Anyways, they had this amount of credit that was just preposterous compared to how much income they were making. I mean, the bank knew when they were giving them the money, there's no way that they're going to, once they use it, be able to pay it back. That client ended up saving $20,000, and we got everything paid off. Everything's at zero. He did have a relationship with a different bank that we paid them in full. He still has their credit card. So that goes towards his credit rebuilding because he never missed a payment and he kept that card and kept going. But the one that became such a nuisance for him, we were able to talk to that bank and make an agreement to say, hey, look, like, they can't afford to pay you everything that you lent them. So what are we going to do? And it saved the client 20 grand.
So was that the clincher for you? Was that the
no
the point at which you thought, oh, this is fabulous?
You know what? Yeah, I think that's the point where I really thought, you know what, I just got to keep my ears open for people that are in similar situations that need this service. It's interesting because every client's so different. It's not like it's just if you have collections or, just that the phone's driving you crazy. When you're dealing with money, it can come in so many different directions, and there's so many different reasons, and there's so many different stories to how people got to where they are. Now, helping with mortgage brokers so that they also understand that when somebody calls, and if anything feels like it's been challenging, like really challenging, that, maybe it's worth taking a look to see, well, maybe the bank would be okay if I just paid back some of this. Like maybe they have a heart, which they do, and an understanding that things happen, job loss,
And maybe there was some clients that I had that I could have helped.
Yes, yeah. What that's true. It's you only know what you know. Right?
Yeah.
And so hopefully this video helps educate people to ask the right questions, not put their head in the sand and say, look, this is the year that I am going to, get out of credit. I'm going to be done with it. I'm going to have a new plan, a new future. If we're part of that, we'd be happy to help. And hopefully we're not. I mean, hopefully things are going well enough for you that you don't need us. But when you do need us, we're here.
So if somebody wanted to look at this kind of a situation, they would need to come to me to get to you.
Yes.
Mortgage agents.
That's the pathway. We're a partner for mortgage agents to come up with a customized solution.
Okay. Well, I'm so excited about this. I know it's going to be something that's going to help a lot of people in the near future.
Yeah. and I always end
What's
these
going on
calls,
right now?
Well, I always want people to know they're not alone. As Canadians, we have so much pride. We don't talk about stuff very much like this.
That's right.
Talk. If you can't talk to your neighbor, call. Yeah, like you could try at your bank. But I think reaching out to a mortgage agent that is impartial, that's just there to help you, I think that's the way to go. Have the questions, start to look at solutions. Because when we don't talk and we just try to have our pride, nothing seems to get better. We're better as humans.
It's a lonely road.
It is. Yes.
Road that ends in a cliff.
Yeah. Unfortunately, too often. Yes. Yeah.
Yes. Well, thank you so much for taking the time to speak with me, Corey. And I really appreciate this. And I'm looking forward to doing many deals with you.
Yeah, let's go help a lot of families. That sounds good to me.
Yeah. I just want to see the look on their face and see the relief just fall off them. That's what I want to see.
Well, even at the beginning, because I make the client estimate so that they can see how much they could save by getting started. So I give that to you to present to the client. And right away, they're like, really? I could save that much money?
That excites me right now. I get excited about that.
Yeah. Yeah.
Yeah. It's like winning a lottery.
Yeah.
Because everybody's against us.
Yep.
You just keep working, paying, and nobody stops to even help you up. So yeah, this is great. I'm really excited.
Awesome.
Thank you so much.
Good. No problem. Thanks for having me on the call today.
No problem.
Hey, thanks for watching. Once again, I'm Jane Wojtaszynski from the DLC YBM Group. Well, wasn't that informative? I can't wait to see the look on your face when I tell you how much you will be saving with your strategic credit solutions plan. As Corey repeatedly said during the interview, timing is very important. So please do not hesitate to reach out to me for a confidential chat. Consider me your Jane of Arc. If you own a home in Ontario and you need some help, please don't hesitate to call or text me today. Don't lose your home because of debt.